tell me, what is your expectation in terms of where we go to from here?
Well, obviously, volatility isn't over. We think that this is just pretty much a start to potentially a bit more volatile markets for 2018, especially given the fact how markets have been heavily correlated over the past few years. But with that said, when you look at sort of the Chinese equity markets, the facts are this. Chinese equity markets have been up 70% over the past 13 months. We've seen a correction now roughly about 10%, which is a fairly healthy correction. And bottom line, when you look at the fundamentals in China, when you look at valuations in China, they're still quite interesting. So when we look at particular, the stocks that we like to buy, we want to buy some of the laggards, some of the underperformers that we saw in 2017, particularly like the financials. Those look very attractive. So, we would be very careful at what to accumulate at this stage in the game. But then you do also look for opportunities because, like you mentioned earlier, there are specifically some stocks now which are trading, 10% cheaper. And markets in general, there are going to be some good opportunities for investors to start picking off, some of the laggards.
So is this a warning then, like Carl Icahn had to say that this was a warning of something to come? Because from what you're saying, it sounds like you're very optimistic on where we go to from here.
Well, fundamentals are still quite strong, not just in China, but Asia in particular. But you've got to be careful of specifically, what type of stocks you want to buy at this point in the cycle. Because obviously we've gone through a very low interest rate environment over the past few years, and obviously the asset markets have been somewhat inflated. But with that said, because of the fact that we are still in the middle of a cyclical recovery, economic growth is still fairly strong. Corporate earnings growth are still fairly strong. There are definitely going to be some opportunities for investors still in this marketplace.
Okay, all right, Ken. I hear what you're saying, but with everything that's going on, most markedly the return of volatility after I don't know how long. What exactly is a low volatility equity strategy right now? What's a good one?
Well, low volatility equity strategies are specifically looking at stocks that tend to be a little bit less volatile, whether be it in bull or bear markets. In particular, those would be stuff like telecom stocks. It could be industrial stocks. It could be specifically, maybe even some of the banks. But in particular, having a portfolio, not just necessarily of the lowest volatility stocks, but having a portfolio that has a lower volatility versus a market cap benchmark does look quite attractive, because the fact that when you look at over the past week or so, these low volatility portfolios has actually outperformed the market cap indices by about 3%. So given the fact that, in the down market right now, what we're seeing, if you lose a bit less, then anytime you go on a rebound, it takes a bit less of a gain during the upcycle to actually make back some of those losses that you had earlier.